Welcome to Savings with Spenny. I'm Spenny. Today, I'm going to talk about the different types of bank accounts that you should know about. Your checking account is like your spending account. This is where you pay for things like groceries or movie tickets or even pay your bills. Think about this like where your money goes in and out. It comes in either from something like OSAP or a part-time job, and then goes back out anytime you use your debit card. As a student, you should ask how often you need to confirm that you're still in school to maintain no account fees on your checking account. Some banks will preset your student account for 4 years, while others will expect you to provide proof every single year. A few things to watch out for. While most financial institutions will offer you discounts as a student, those go away once you graduate. So when you look for a good checking account, you'll want to look for low or no monthly account fees, the number of free transactions that you get per month, and the cost of any Interac e-transfers that you do. Now, a savings account is where you put money that you don't want to spend. The reason is because usually savings accounts will charge you fees for each transaction that you make. A savings account is really used for saving up for things like travel, or a new laptop, or just to have for emergencies. And you can have as many savings accounts as you like. Pro tip, you can even nickname your savings accounts to make it more fun, like 99 problems, but cash ain't one.
I got 99 problems, but a ain't one. Hit me.
There's also a TFSA, or tax-free savings account. This is similar to a regular savings account, but you can also invest your money and have it grow tax-free while in this account. So it's meant for a long-term goal where you might need to invest a little bit of money to get there. The government determines the maximum amount that you can deposit each year. And if you deposit more than what you're allowed to, then you're taxed hard. You can find out what you can specifically deposit by logging into your MyCRA account. This account could be used for something like saving up for a house, because you'll definitely be able to afford one eventually, right?
They ask you how you are, you just have to say that you're fine when you're not really fine, but you just can't get into it because they would never understand.
Finally, we have an RRSP, or Registered Retirement Savings Plan. This isn't necessarily an account that you'll have to worry about right now, but something to consider once you graduate and are working full-time. This is a savings account where your money is locked in until you retire. You can also only deposit 18% of your earned income, up to a certain overall maximum. Within this account, you're also able to invest your money and have that growth be tax-free. But let's talk a little bit more about that tax. This account is a bit unique because it lowers the amount of tax that you have to pay right now. That's because any money that you deposit into your RRSP is not considered taxable income. Now, when you take the money out, that's when you're taxed on it. The idea behind this is the tax that you owe now will be more than the tax that you owe when you retire, which means less tax overall. It's a bit confusing, but an investment advisor should be able to help you sort through it in more detail. Thanks for watching, and we'll see you next time on Saving with Spenny.